Well, good morning, everyone. How are you guys this morning? It is Tuesday morning. Let me get you my monitor. There we go. That should load in just a moment for you. The market is just about to open, and we have seen a rather substantial overnight here in the NASDAQ. Let me pull up the Falcon here. And you're going to see that the NQ from the London Open has been very aggressive to the downside. We had a nice trend change signal here just prior to the London Open, and we're actually working on a possible trend change signal to the upside. That just got spoiled as our trend line flipped back over to the red side. But it does look like we have a little bit of a trend in play this morning. Now, this is going to look like a huge opening gap to the market this morning. And whenever you get a big opening gap like this, it's entirely possible that the market's going to try to trade into the gap. Actually, one of two things are likely to happen. Either the free fall will continue, or we're going to see a little bit of recovery into the gap before the market reverses again and heads lower. There's no real way to tell which is going to happen, unfortunately. So we just have to trade our signals for what they are. And try to be as careful as we can. Okay, so here on the Hawk, on the NQ, right out of the gate, we're getting a first micro-macro cross. I might dial down the risk amount on this a little bit, just because it's early. Let's see if I can cover it above that swing high. Well, I can throw a onesie on it. That's not too bad. If I dial this up a little bit, say to 1.5% of my account. Oh, now we're into yellow bars, so we'll just ignore that. So I thought maybe we might see an early morning move, a continuation of the overnight. Into the opening minutes, but it doesn't look that way right now. Okay, the Raptor might be working into a double pullback here, and I see a green bar sell on the Hawk. Or there was a green bar sell on the Hawk. No, it's since disappeared. Okay, so we're starting to get more yellow bars on the Hawk. Our Falcon trend line is starting to get that roller coaster effect. And we're firmly trading in the band on both our Eagle and Raptor. So this is probably a good time to take a look at the other markets I'm watching, soybeans and crude oil. Crude oil on a little bit of a rally. So here's crude oil on the Hawk, trying to get a green bar sell out of this. Oh, I'm not going to be able to shoot a trend line across all that. Oh, lots of room for crude oil to move higher. Especially if we take this peak into consideration. So we're getting a green bar sell We did get the macro pullback here, so this is the same area that we're contending with. Now, you can do a couple things with this green bar sell. It is our counter trend signal. You can just use it as an early warning. You don't actually need to trade it. But notice we haven't had a real test of the extreme here. So this is one of these signals that we might be able to take both directions. Our Falcon on crude oil is turning over also. Okay, so there goes the green bar sell. Now we're going to be waiting for a first micro-macro cross signal. Looks like there will be a bit of a test of the extreme in there before we get anything out of it. Oh, all right, here comes the NQ again. Now simultaneously on the Eagle and the Raptor. Now notice we're getting this little effect here. With the Eagle, sometimes it's worth your while to wait for that second push. You know, let the market engage the order. We are getting lower swing highs. All right, the market's still kind of sideways, kind of choppy. Kind of ugly. Let's see here on the Hawk, all these yellow bars. All right, working on a trend change signal here on the Falcon also. Same kind of deal. Okay, you can wait for the second push on this signal. I guess we have no choice. I was a little late getting here. So there's the second push. See how that green bar is coming in. We can cover it up there, and I might throw a runner on this one. Come on. All right, so the big deal now, these lows, the low right through here. This is where the buyers put the brakes on before, and that's where they're digging in again. And I think I want to hold my stop just a little bit here, so I'm going to disable my trade manager just for the moment, and I'm going to watch and see where those sellers are going to step in again. So same thing here. I want to hold my stop back a little bit. Oh, actually, I was above this swing high. Because it's not unusual to get a reaction from these lows, right? Okay, here we're getting a macro pullback. So we're getting signals across the board with our NQ trade. So regardless of how you wanted to get into this, we've got several options. And it is a higher risk type trade because we do have all these yellow bars. We do have this indecisiveness. Okay, so it looks like this is the seller's recommitment to the trade. If this current bar finishes red, I'm going to be a little bit more aggressive rolling my stops in. If not, I'm going to hold my stops until I get that red bar that showing me that the sellers are exhibiting some sort of control over the market. Yeah, there they go. So it's, it's still early. What can I say? They haven't sorted themselves out yet. All right, let's see. 1, 2, 3, 4. We did get a 4-arrow consolidation here. 1, 2, 3, 4. Yeah, 4-arrow consolidation already printed. We'll see. We should come back with the first micro-macro crosshair signal on the hawk, or it looks like a red bar buy, which might be a failure. Okay, now you can see that we have gotten that other swing that we're looking for, so I can now be more aggressive with my stop strategy. Maybe I'll go to parabolics. I could even go to bar high low, something like that. And same thing here. Okay, sorry about that. I lost audio again for whatever reason. All right, I better enable these. Accept my stops. I got the ATR on. Come on, let's go. Come on. Come on, one more bar. Oh, you stinkers. Now notice I've got quite a bit of open profit here, more than we normally have, but I'm trying to take advantage of a runner. All right, so now I'm going to go with the bar high low. I'm going to squeeze this trade pretty hard. All right, we hit our profit target here on the Eagle. Fantastic. I was fixing my mic so I didn't get a trade on here with the Raptor. I wanted to get a Raptor trade going also. I wanted to show you something here on the Raptor. With the Raptor, you know, you can always take a look at these flag type formations that form, right? Whenever you see the market breaking a trend line that's formed, you're seeing lower peaks. Notice how nicely that was making lower peaks. You're almost guaranteed some sort of move out of that. Now we actually got the initial signal back here, and of course the entire trade depended in part on where you ran your stops, which is again why I try to keep my stops a little looser to start, and then I become a little bit more aggressive as the market shows me who is controlling the market. So whenever I'm seeing lower peaks like this, I can take a little bit more confidence knowing that the sellers are exhibiting control. And that's exactly what we got. We got a nice little burst to the downside. Now we're going to get the market coming back, retesting it. I think we've taken profit on all of our positions, which has been, let's see, are we closed out? Yes, that was a profitable little move just for throwing a onesie on each of them. Recovered our loss here on the Hawk, and once again, it wasn't really a loss. It was just unfortunate placement of the stop loss, right? I believe I placed my stop above that swing high, and was that the one I got tagged on? Yes. So look at that. Just got tagged on the number. How crazy is that? Now, had I ran my stop just $5 looser, or ideally above this swing high, you know, it's still a risk amount I can afford because I'm using the risk percent module. I'm only risking 1%, but look at the difference, right? Instead of a loser, instead of incurring that early loser, I would have banked nearly $200 in profit. So I guess the point I'm trying to make is always try to give your trade a chance. Nice. Jim says he bought some Dow Jones puts yesterday. Well done. I know I've got in my nightly trade recommendations, an NQ short, short the NASDAQ from the other day. So I was very pleased to open up the chart this morning and see the substantial move lower. That will be helpful. Dustin is saying, how do you get the data from the overnight? I have a gap. Very simple, Dustin. What you want to do is you go to your chart and you go here to your data series. And here on your session template, it's probably going to say use instrument settings. And what that does, it defaults to the day session. If you would like to see the overnight data, you need to scroll down here a little bit. And you're going to have a choice between default 24/5 or default 24/7. What's the difference, you say? Well, the Globex market has a little pre-Monday morning session, late Sunday night, early Monday morning. I never trade it, so I don't need the default 24/7, but either way, default 24/5 or 24/7 will show you the overnight activity. Yeah, like Jim, Jim says the same thing or a similar thing. He says, I've opened my chart and I see a huge gap down. I've never seen that before. That's because if I change this to the instrument settings, it doesn't really affect the signal generation. Oh, no, it didn't let me do it. Okay, I'm not gonna mess it up. I could build a new chart. It's probably the template I have on here that's doing that. Let me build a new chart and you will see. Well, you guys already know what it looks like, but for the rest of the folks in the room, no, it's my template that I'm using. Okay, sorry. I thought I could build it to show that, but my template keeps overriding it. But that's how you do it anyways. That's how you get to see the overnight data. Oh, looks like Dustin and Jim, you're having the same problem. Oh, okay. Here's a tip, Jim. Dustin says his was set to 24/7 and it showed the gap. Oh, maybe that's what I should try. But he changed it to 24/5 and it removed the gap. So let's try that. Let's try 24/7. That's odd. It shouldn't show a gap on 24/7. Yeah, it could just be a little mix-up with your data provider. Anyhow, Dustin said he changed it to 24/5 and now it's fine. Okay, I better leave that alone before I break something. Oh, sorry, I misread Dustin's post. He says, no, it didn't. It made a new gap. Dustin, who's your data provider? Is it Continuum? That's who I think Jim, oh yes, yes it is. So it looks like you guys are both using the same data. In which case, not to panic, it's just a little glitch on your data provider. They're not giving you the overnight for whatever reason. It happens. I've had it happen when Zenfire was still around. It would happen occasionally. it'll clear up by tomorrow, I'm sure. Okay, so now we're into a fine mess, as they say. Soybeans still insisting on going sideways, so nothing to look at there. Crude oil working on a trend change signal, which is kind of interesting. Crude oil also in that rather large decline, but we did see that there was some move to the upside here. Working on a trend change signal to the upside. The big obstacle is here off of this high. So if you chose, well, we've already missed, well, we're kind of back at this entry. 1, 2, 3, 4, 5, 6, 7. Got to give up 7 ticks to get the better entry. Almost halfway to our profit target. I'm never keen buying into an obvious downtrend. I'll get emails from people, like if you bought this and let's say this trade fails, right? Let's say crude oil reverses here and stops you out. I'm going to get emails from people saying, why didn't that work? It was a trend change signal, wasn't it? Yes, it was. But sometimes you need to temper what the tool is showing you. Like, it is a trend change signal, and I am going to take it, but I'm going to try to protect myself here somewhat. Maybe I'm going to delay my entry. No, it's not going to let me do it at 1%. I'm going to try to keep my risk minimal. Let's see, crude oil is so darn expensive. $300 to play. Or I could get a second push on the entry, which is kind of what I'm looking for here. I had the reversal bar. Now they're trying to trade higher. If they get out above these highs, this 49.50, 4.55 area, we could see a little bit of a run up. Hard to say exactly how high, but that's the nice thing about crude oil is once it starts to trend, it trends. We've got the hard edge of the eagle sitting right here at 49.60, our eagle and raptor. So I'm not real keen on buying crude, but that's how it seems to be setting up at the moment. All right, we'll put that on the shelf. The hawk also giving our first micro-macro cross signal higher. So there is some obvious buying pressure here in crude, but once again, here's the signal. This one's actually a little bit framed a little tighter. For a few ticks, I can offer it up on the other side there. Just try to do a little hit and run. But remember, you need to, balance these things out. Trend changes don't occur on a dime. They take a little while, and the last thing you want is to get stuck in a sideways ranging market or an uncommitted market. It doesn't look like we're going to get much out of soybeans at the moment. Here's the hawk on soybeans. Very sideways. A nice little move lower in the overnight, which was a pleasant surprise. Even though I didn't pay much attention to soybeans yesterday, they did end up putting a little bit of a rally. Couple first micro macro cross signals. This one turned out very well. This one could have been a little dicey. If you had the courage to run your stop below here and hold it until the buyers showed up, you would have rode out the swing, but you would have had to take a lot of heat to get the job done. Just not very attractive looking market of late. I might put wheat up there, see what's going on in the wheat market this morning. Look at this mess going on here. We got a green bar sell. Now we're coming back with a red bar buy. This is usually bullish. If I was, I would have taken this red bar buy here. So let's see if we can't get something else going on. All right, sort of an early trend change signal. We're right back. See this line here on our eagle? We're right back to the old resistance area. So same problem as before. Okay, crude oil is backing off, so I'm going to cancel those orders to try to buy. Something to make a note of if you're trading your hawk and you get a green bar sell and it's followed by a red bar buy, this green bar sell should have some follow through to it. And then if you come right back with a red bar buy, that's normally bullish. Let's see, did we get our profit objective out of that? Oh, I had a runner on. I'm pretty sure we got our 10 ticks out of that. Yep. Oh, and another red bar buy. Okay, this this kind of changes things now. We're not seeing follow through on the green bar sell. We're not seeing follow through on the red bar buy. Ay, 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 what a mess. Two, three, 360, 350. Yeah. Everybody's going sideways now. We're getting a double dot signal here on our crude oil. Not something I want to get too excited about, but it does look like crude is getting perhaps a little bit weaker again. So might be flashing a selling opportunity here. I might take advantage of an early trend change signal though. That's the one that occurs just as the trend line changes color. The trend line's going to change color, the filter's going to change color. It's going to look similar to this one here, where it turns over and generates the signal right away. So I may park an order and just anticipate that. See, we're getting the lower swing, right? We're getting kind of that bear flag type formation. All right, there's the signal. Everything's turned over. I'm going to try to get the better entry. Oh, we're just waffling on this bar. In fact, I should enter below the low of this bar because this bar is going to be the one that decides whether this trend line is going to stay red or turn green. You see how it keeps flashing back and forth? It goes a tick higher, it goes green, it goes a tick lower, it goes red. And this is one that would call for more aggressive stop strategy also. Come on, crude. All right, well, if this changes over and turns green again, then I'm going to scrub the order. Only going to give it the one bar to get together, because if this turns green, we're actually working on a late filter entry to the buy side. So that'll be a game changer. That will make the buyers look stronger yet, in which case we should generate a buy signal somewhere around this 49.55 area, 49.50.55. So at the moment, it's looking like we might have crude oil pinched. Oh, and the NQ is just, looks like it was a good thing we took that early trade, because now look at this mess. Yikes. If you're desperate for a trade, you could look at selling the failure of these red bar buys. I would probably try to cover above the high. You can see it's pretty much a channel type formation. I suppose you could even do an OCO on it if you wanted. Bracket the range and trade it higher or lower, whatever the case may be. Now remember, with the OCO order, you toggle it on and off here, and then you're going to right click to enter your orders. And these orders will be live the moment you put them on your chart. So I tend to place them away and then drag them in to where I want them to be. And now it's turning into a first micro-macro cross signal. Yeah, Jim says it's a pretty tight first hour range. So our low is where? Right down here. Oh, here I have it on the Raptor. What am I doing? So there's our high and lows. And the market kind of trading in the middle. right, here come those sellers again. Oh, and they slipped us pretty good on that too. Didn't want to see that. Okay, so the big problem now, these lows down here. So I wanted to enter here. Look at that. That's what, a 3-4 tick slip? That's crazy, especially for the NASDAQ. Crude oil, no. NASDAQ, yep. First micro-macro cross signal building. Come on, let's go. Okay, come on, you guys. There we go. Let's press a little harder. Oh, come on. Jim's asking about the Raptor on the YM. Am I getting a buy signal? No. Here's the YM on the Raptor. Nice double pullback signal. That's almost textbook right there. Comes out, generates our with trend signal. Okay, I'm trying to nurse this trade a little bit here. There we go. Okay, probably time to take it to break even. There we go. And time to think about something a little bit more aggressive. Come on. See, once again, you see how we're pressing 100 and, well, almost $150 here. That's 3 times our regular profit target. So never be shy about closing out a trade. We'll see. If I get 175 out of this, I think I might punch out. Oh, spoke too soon. There's 175. Okay, we've got 130 locked in. They didn't give me a chance to hit the close button. I saw 160 there for a sec. Come on, show me 160 again. I dare ya. 55, come on, come on. Oh, 50, 45. Oh, I was going to close it out at 160 if they showed it to me. Okay, well, you know what? It's been a very pleasant day trading so far. And I didn't look because I was on watching that trade a little more closely, but I think we got comparable signals here on the Falcon. Where did we get our trend change signal? Right here. This was our early trend change signal, which would have coincided with breaking the trend line or pretty close to it. Here was our proper trend change signal. Let's see whether or not that has reached its profit target yet. Yes, it did. It also found its profit objective. So whether you got in early or waited for the full signal, everything worked out quite nicely. Here's the eagle. Now the eagle would have been a little bit more difficult perhaps to decipher. So we had the market encounter the trend line, started going sideways a little bit here. Here's the problem with this type of scenario. You're never, when you're looking for that test of the extreme, it is possible to get a very deep test of the extreme and then a reversal. But it looks like from the wicks on these bars here that there was an opportunity for a second push on the entry. In other words, the market engaged the order, traded up here to form the wick, at which time you could have entered below the low and actually below the ATR line, which would have brought everything into sync. Let's see if that has fallen off to our profit objective. Look at that. Just hit the high probability target and is starting to turn. Jim, try building, Jim's saying his filter is the wrong color on this Raptor, and it's probably has to do with your, well, I'm going to say it has to do with your data. I don't know why your data is scrambled like that. What you can try to do is you can try building a new chart. And see if that makes a difference. Other than that, call up your broker and ask them what's going on with your data feed. If they can't repair it right away, they might be able to at least do a little something for you. Okay, we're coming up on the bottom of the hour, and I'm afraid, like I mentioned yesterday, I'm going to have to run today. So we're only having the room on for an hour. If you have any questions, please post away. The NQ does seem to be content to move lower today. And I imagine the stock market will be doing the same. However, the thing that gives me pause is the extent of the move lower already. If you factor in the overnight, we've come down a fair distance. We still have this opening gap up here, which is going to haunt the market a little bit. I'm not sure we'll see it recover all the way into that opening gap, but it may not be a free fall either. So I guess what I'm saying is you may want to be a little choosy about which trades you're going to commit to. You can see I just drew a trend line in here on the Eagle, and that's only because I know there's trend traders in the market, right? I know they're going to be looking at this. There's going to be sell orders at 43.60. I know the hard edge on the band is going to come into play, so if it trades up here to 43.65, those might be better places to sell than to try to sell 43.50. All right, I was looking at the wheat market. Let's bring wheat over here, see what's going on. And wheat made again a nice little move in the overnight. It's funny, used to be the night session, the overnight session was nothing in the grain markets. And now some of them you can get some pretty decent moves. Yesterday's session in wheat, didn't really get much of a signal there. The day before, well, kind of sideways also. Day before that was a good one. Saw some very nice moves right out of the open. And today seems to be going a little bit sideways again, so maybe wheat is not the market I want to be watching. We'll throw corn on here. No, corn's even worse. Okay, we won't do corn. Here's the corn market. So even less trading going on. These white lines are all session breaks. They're all day break lines. Let's see what's going on in the British pound, maybe. Here's the hawk for the British pound. Now I do have it currently set with the faster settings, the settings that I normally use for the instruments that are trading at 12.50 a tick. The British pound trades at 6.25 a tick, so I should probably put the normal settings on here. And as you might expect, the British pound a little bit more active in the overnight. Here was the London Open, first micro-macro cross. Nice little move down. Another first micro-macro cross. This first micro-macro cross failed. But, you know, you take a look at this. What are we missing here? What are we missing from this first micro-macro cross signal? Why might I not be overly excited to take this first micro-macro cross signal? Anyone? Class, wake up. Why might I not think this was even though it's a first micro-macro cross signal, even though it's a high probability signal, why might I be a little suspicious that this signal here might not have a lot of follow through to it? Yeah, that's right. Way to go, Charles. Well, good point. Michelle says it's because it's far from the crossover, but Charles got it. We don't have a test of the extreme, right? Before this market is committed to heading lower, I need to know that all the buyers are gone. We haven't really had a test of the extreme here. The market's come down. Yes, it's flashing a signal. Honestly, I'd probably still take the signal, but I would dial down my risk amount so that I have less exposure. I would try to run as deep a stop as I could. And I'd look at this and say, okay, 150 bucks if it goes sideways, okay, I can live with it. But we didn't have a test of the extreme. Okay. Notice here, before this market went higher, we had a retest of the lows. This is what gets the fib traders all excited, because they'll shoot their fib lines across here and they'll say, oh, look at this. This was like a 62% retracement. See how well this works? How smart we are? Yeah, it's not because you guys are smart. It's just that and I'm not knocking fib traders. One of my friends is a very good fib trader. But it's a characteristic of the market that before prices can reverse and head lower, doggone it, stop that. Before prices can reverse and head lower, they need to retest the high and then fail. Before prices can go higher, they need to retest the low and fail, right? So we haven't seen this part of the trade yet. So we're generating a first micro-macro cross signal, but we haven't had the retest, and that's why this one did not work out. We have our trade, the market brings us in, and all of a sudden it's like, uh-oh, here comes that retest. And unfortunately, we didn't get an opportunity to tighten our stops, at least not on this setting. So here's our retest now, right? Now we have this portion, and we see the sellers trying to come back once again here, and all of a sudden the buyers step up and take the market away. Well, guess what? Now I'm going to be a little bit more bullish on this market, aren't I? There's our first micro macro cross. That looks like a more appealing buy because I've had the retest. And it looks like the market is ready to head higher now. Michelle is asking, isn't there a test at the extreme at 415? No. I would, okay, yes and no. So Michelle is asking, isn't this a retest? I would say no, and this is why. Okay, you've had the market pretty much in a free fall from here to here, right? Very minor pullbacks, if any. You've had the market make a very strong rally in the face of this very strong decline, right? They recovered almost the entire range that the sellers were able to force the market down. So here come the sellers again. Given what the buyers have done here with this rather substantial move in the face of this strong move lower, do you think this is an honest attempt on the part of the buyers to recover the market? This itty-bitty 4-bar push higher? No. That's why I don't consider this a test of the extreme. Now, sometimes you're going to look at a chart and in hindsight you're going to say, wow, that really was the test of the extreme. Yeah, this is really all the buyers could muster, and then the sellers knocked them way down, took them to school, knocked them out of the park. But you need to kind of balance these things. When you're looking at a chart, it should almost be like reading a book, except you're trying to decipher who has control of the market. Sellers exhibited great control here, right? The buyers didn't even show up. Buyers made a very strong move against the sellers. So who has control of the market right now? They seem very evenly matched. Sellers force the market back down. Okay, so the sellers are showing some strength again. Where are the buyers? The buyers are not going to walk away from a move like this, right? This move right here, the buyers are not going to fold and only give us an itty-bitty rally. So when prices come back down here and now give us our first micro-macro cross, I'm still looking for the buyers, right? The buyers who bought down here, the buyers who bought right here, where did they go? They have an investment here. They have an investment in a higher British pound. They're not just going to walk away. So that's why I said this would, to me, this would not be a test of the extreme right here, this little itty-bitty blip. That's more of an anomaly. And sure enough, see the market trades a little bit lower. Now all of a sudden prices are more attractive to the buyers again. They're saying, whoa, this is worthwhile. Let's buy again. I always use a gasoline analogy because all of us can relate to that. You know, if you're driving down the street and, well, I'm going to use liters because that's what our gasoline prices are, and you can just multiply by 4 for gallon prices. Currently, gas is $1.20 a liter here, so that's what just under, or about $5 a gallon, or just under. If I'm driving down the street and I see a service station has gas on for $1.15 a gallon, $1.15 a liter, even though I may have 3/4 of a tank, I may stop and top it up. Why? Because it's a good deal. If I'm driving down the street, well, maybe a nickel a liter isn't enough. That's only going to save me maybe $1. But let's say I'm driving down the street and I see it $1 a liter. I can save 20 cents a liter. That's substantial, right? If I have 3/4 of a tank still, I'm stopping. I'm topping it up. And I'm probably rummaging around in the trunk to see if I still have my jerry can there, and I'm going to fill that one up too. And it's the same thing with the markets. Whenever the market sees it's a good deal, it's going to buy or it's going to sell. Buyers think it's a good deal right here. Sellers think it's a good deal right there. So when the buyers come in and buy, there they go. Sellers are stepping it up. They're thinking, okay, it was a good deal up here. Now it looks like a good deal to us right here. And the buyers are saying, oh, well, it was a good deal down here. It's looking like a better deal here. So they're swapping control, right? The sellers had control for a moment. Now the buyers have control. And now we've got them between a rock and a hard place. Now somebody is going to tip them over the edge one way or the other. Here come the sellers again, right? They're trying to step it up. And this is, by the way, this is why our hawk is all in a mess. Yellow bars, trend lines all a mess, filter all a mess. It's because of this waffling back and forth. And now the buyers have shown that they can gain control because they've pushed over the sellers here. But where are the sellers stronger yet? Well, they're stronger up here. So let's see what happens if the market trades up here near these highs. Oh, look at that. Is anybody surprised? Is anybody surprised that the sellers stepped up here again? So now the whole process begins over again. We know there's active selling here. Where are the buyers? The buyers have just moved the market right back up into the sellers' favorite area to sell. This is a very attractive price for sellers. This is the dollar a liter gasoline, except from the seller's side, so I guess it would be $2 a liter. If you could sell gasoline, if you could buy gas at $1.20 and sell it for $2, you'd be selling like crazy, right? If you were a retailer. Well, that's what's going on here. Sellers are getting premium for their British pound, so they're interested in selling. So who has control? Oh, well, the buyers are trying to exhibit some force, but have we seen a real decent test of the extreme here? Well, yes and no. We've seen the buyers maintain control, but not a real strong test of the extreme. So would I be surprised to see this market drift into a macro pullback and then give me a buy signal? No, not at all. That's why sometimes if I'm generating, let's pretend we didn't get these signals here. Let's pretend that this signal is our first micro-macro cross signal. It's not. We're only pretending. So this is where logistics come into play, right? If this is my first micro-macro cross, I have to look at this and say, can I reach my high probability profit target? Well, actually, I need to dial it down because we're trading 6 1/4 a tick. Oops. So I need what? I need 8 ticks. Can I reach my high probability profit target before the market reverses again? Well, my high probability profit target is right on the highs. And I'm pretending this is a first micro macro cross, so I'm saying, well, it's a strong signal. I should take it. I don't want to enter above here because that is my entire profit before I even get my entry. So I'm probably going to be committed to entering there, but I'm going to try to keep my stop a little deeper. Why? Well, because I may see a macro pullback signal here yet, right? Because of the sellers. I know there's sellers, they're reacting, they're pushing the market down. I don't know exactly where the buyers are going to step up. Like I can shoot a trend line across the bottom here, This is sometimes why trend lines are useful, and you can say, yeah, okay, the buyers may let the market drift somewhere down here, and then they're going to become more aggressive buying. So this could very well turn into a macro pullback. So if I get filled, which I got filled here, I wouldn't be surprised to see the market peel against me a little bit. Now, because it's a first micro macro cross, the market very well might just continue higher, which is why I probably want to be involved in the first micro macro cross. I know it's a strong signal. However, if it's not a first micro macro cross, maybe I'll hold out for the macro pullback. Even if I break these highs here, I can still see the opportunity for a retest before the next rally. Because again, that's what markets do, right? The buyers break through, the sellers jump on them. If the buyers are serious, the buyers are going to come back. It's this whole test of the extreme over and over and over again. So that's what you want to get used to looking for. That's a good question though, Michelle. All right, you guys, I need to pack up and get on my way. Tomorrow is the open house room. So we're meeting in the open house venue, and I'll see you guys then. All right, bye for now.